Okay, Macquarie hosted a call with HDFC Bank in which the new head of the bank, Sashi Jagdishan, as well as the CFO Srinivasan Vaidyanathan participated and spoke about the current trends prevalent at the bank as well as the outlook on various fronts from credit offtake to asset quality. Now, beginning with the first and perhaps most important point is the asset quality. Currently, HDFC Bank's moratorium stands at around 9 to 10%. That makes it best in class. It's Kotak Mahindra Bank, SBI, Axis and HDFC. These were the four banks that had moratorium either of 9 to 10% or slightly under. So in that sense, they feel fairly confident that the gross NPL, which is currently at 1.36, might see some elevation but nothing drastic. Now, in order to provide us with a benchmark for how bad it may get or how good it currently is, at the time of the global financial crisis in 2008, they saw this figure rise to as much as 2%, which is one of the larger percentages ever witnessed at HDFC Bank. So the management has come out and said that despite COVID being an extremely challenging time, they believe that the gross NPLs at 1.36 capture a fair amount of that and will definitely not go anywhere close to the peak that we saw of 2%. So that's something that can be reassuring to investors. The next thing that they spoke about is the focus on semi-urban and rural areas as the next growth engine. They see an opportunity here to eat into 6 to 7% of market share. These markets currently have loan to deposit ratio of around 30% but growing. So it also is an inviting and an attractive market for HDFC, and they believe that this area is also fairly robust and resilient. Now, they won't go up the risk curve, with that being said. So within semi-urban urban and rural, they want to keep it at around 20 to 25% of the top tier customers within these segments, and that again should help lower the asset quality concerns. So these are some of the major positive cues coming directly from the management, and Sashi Jagdishan spent a great deal of time also talking to the new investors and addressing them during this call. One sensitive subject which has been there for HDFC were the two lawsuits, the Rosen lawsuit and the Experian lawsuit. Now, the Rosen lawsuit also happened fairly recently last week. It was relating to some matters. There's also been some concerns regarding some allegations of malpractice in HDFC Bank's vehicle book. So as far as the management is concerned, these allegations are purely immaterial at this stage. They haven't really resulted into any kind of penalty or impact or adverse judgment against the bank. So we probably shouldn't focus on them too much for now, until and unless there's some further developments that can be read into further. So these were the major cues. Finally, just the digital ecosystem. HDFC Bank's platform is doing very well. For all banks now, the digital platform has become a key source for your deposits as well as your advances. It's all happening online. HDFC feels that they've created a very welcoming, or what might say a very proficient digital ecosystem, which they believe is going to yield significant results going forward. So in a short line, limited asset quality issues, decent growth opportunities while maintaining integrity and safety, and good corporate governance. These continue to remain the solid themes at HDFC Bank as far as the management is concerned. And Macquarie on the back of this has a target price of 1,219 rupees per share. The stock has been fairly activated by this news today and was up around 2 to 3% in trade.